Should you pay your car loan off early? I get asked this question many times, and one person will say, I'm already in my 5th year, I've got another 4 more years, I've got a little bit extra cash. I just don't want that headache of every month paying off my loan. Should I just pay it off and do the settlement? Before you answer that question, let's just look at how a typical car loan in Malaysia happens, right? So imagine if you bought a nice little brand spanking new car, 55,000, put in 10% down, that means you paid 5,000 deposit and you took the rest in loan. So your loan is 50,000. Now, just for simplicity, right? We take 50,000 times 4%. Let's say your interest rate is 4%. Now, it doesn't sound like a lot. You're like 4% times 50,000, it works out to 2,000 a year. It doesn't work out a lot monthly. Now, but the way it's calculated and the way your debt is reduced is what makes that big difference, okay? So what happens, the bank will calculate this way, right? So 2,000 a year multiplied by 9 years. So assuming you take the full maximum, you take a 9-year loan, right? Which is 18,000 plus your original principal of 50,000. Right? Now, so that works out to 68,000. Now, they take this 68,000 and they divide it by 108 months, right? Which is 9 years times 12 months. That's why you get 108 months. How your loan is repaid is what makes that big difference. So let's say in that 5th year, you would think, oh, you know what? I maybe would have paid down half of my principal. Let's say 50,000. After half the 10 year, 4.5 years, I would have paid off. My balance should be 25,000. Unfortunately, it's not. That's not how it's calculated. So what happens is that with banks, it's called front loading, right? In the last example, your repayments will work out to roughly 630, right? So your first year, you would have paid $7,560. In the second year, you would have cumulative paid off $15,120. Unfortunately, almost very little or none of it goes to paying down your actual principal. What you've done in the first 2 years is pay off the interest for the 9-year period. It's then when your principal starts getting reduced with your subsequent payments. So if you thought in exactly halfway mark, 4.5 years, you were to reduce your principal by half and your balance is 25,000, unfortunately it's not. Right? Now, that's why when you look at interest rates, they look so low, right? 2.5% or 2.8% or 3.5%. It looks low, but it's the way your loan is repaid. So should you do an early settlement? It depends where you are in a cycle. If you are in your 7th year of repayment and you think you're going to save money by paying it off early, you might as well not. Now, the reason being is that because you would have paid off your 9-year loan of interest in the first 7 years, and you would actually be, in fact, making the bank even more profitable. I know some banks or most banks will have this thing called a rebate or settlement rebate, but that's bank dependent and depending on your credit score and your relationship with them. So in this instance or in this case, I'm just using a very simple example of no rebate. But even if you factor in that rebate, you're going to find out that you are actually not saving any money. Your effective interest rate is actually much higher than the 4% or the 5% or the 3% that you're actually paying. So it doesn't work the same way as your mortgage payment where it's loan reducing. Yeah. So I hope this answers your questions. Work it out. Now, if you had extra money and you think you could invest it and get better returns, you'll probably be better off doing that than paying off your loan early, or even if you put it into fixed deposit and earn a higher interest rate, you'll probably still be better off than paying off your loan early. I hope you guys enjoyed this session. Thank you.